viewers, welcome to the main edition of our Nigerian Macroeconomic Market Outlook 2024. And I'm not alone in the studio. With me here, I have Mr. Kaliba Bilala and Mr. Sadiq Safiriyu, both finance experts in their rights. Joining me in the studio is a pleasure to have you both in the studio. You're all welcome.
Thank you, Sean.
Yeah, good afternoon, and thank you for having us.
Thank you very much. To start with, we'll just be discussing and sort of giving perspective to the markets with respect to the fixed income and equities market and the macroeconomic perspective of the market generally. And we'll just have like a preview of what happened last year and more like an outlook. So we give our esteemed investors a bit of searchlight on where they will be investing and where they expect to see maximum value and returns for their money this year. So let's take it a bit back. Like last year, a lot of things happened last year. But first of all, let's just speak up to inflation. We saw inflation rise double digits. We saw it grow sometimes. I think at some point it was 18-year high. So I don't know, Mr. Bilala, can you just draw a bit of light to what happened last year with respect to inflation?
Well, in terms of inflation, I mean, there have been a lot of things that have been said, especially with the coming of the new government, the Tinubu administration, the actions that were taken. So we have the devaluation issue that happened in the middle of June. But then before then, we had the subsidy that everyone took for granted that was immediately taken out. But then, in fairness, there were things that were wrong even before that time. So these were hard decisions that had to be taken. And yes, did a lot of people feel the pinch? Yes, they did. And the outlook went from bad to worse.
So sorry to cut you. Was it that it was necessary to be done? It was how it was done that really caused the bit of madness we witnessed in the market last year?
So there are two ways of looking at it. You can rip the band-aid quickly, or you can try to do it gently. And I think the new president, realized that things had to be done
immediately.
Yes. Now, whether people actually were ready for that was a different matter entirely. And you saw the pickup in inflation, but to just put it solely on this government will be a bit unfair. And yes, it was a high, because the average inflation at the end of the year was 24.7%, like a whole 6 percentage points over the average for the last year.
Interesting. Do you have any?
Yeah, I do agree with him. I mean, the fact that inflation has actually even been elevated even before the new administration came in, that is also something to put into perspective. We should also consider, imported inflation, especially with, the Russia-Ukraine war and, residual of the COVID-19 effects still have on, the Nigerian economy. So, as I said, inflation has been elevated and it remains so for the most part of 2023. And the fuel subsidy removal, expects unification had its effects, but there are also some other things, some other factors to consider, just as you rightly said.
So still on inflation, just breaking it down a bit, looking at the drivers, insecurity, the logistics costs, like I also said, the imported inflation. Are we still going to see inflation at elevated levels going into just like an outlook for 2024? Do we still see all this madness continue?
So
sorry for my use of madness.
No, I mean, understandable. So I have a different perspective on the drivers of inflation, as you rightly called it. And I choose to look at the simple definition of inflation that most people take for granted. It is too much money chasing too few goods. Now, the truth is that there are different inflation measures. You have the headline inflation that gives you an indication of supply issues. And then you have the demand side, which is the core inflation. Now, it is easy to place the blame on supply issues because you have no one to hold to account domestically. You can always put the blame on the Russia-Ukraine war. But both measures are going up. So at what point do we tell ourselves that it is a demand issue and not necessarily a supply issue? Because when you look at the basket, like we were talking about earlier, there are staple goods that are within Nigeria, found whether in the north or whichever part of the country that is responsible for our produce. So yes, I don't subscribe to the supply issue. I think it's a cop out on our part. But then again, that's my own.
So you still see inflation
Yes, I still
rising.
see inflation going up because if I believe that it is a demand issue of that too much money aspect chasing the too few goods. So the too few goods we can't necessarily point out because what is the supply people are talking about, the foreigners or whatever it is. But the too much money, I can see it. The data is there for all of us to
See.
yeah.
Mr. Sadiq, do
Yeah,
you?
I actually do align with his thoughts. I mean, we had the ways and means. I think
That
you know
was
the
grossly abused.
yeah. I think the effect of that is also will I say underplayed on our inflation now. The effect of that is also underplayed because when we look at it, most of the data tend to speak to the fact that structural issues are, much more the reasons why we are seeing our elevated inflation. However, there is still that level of monetary effects. The part is there, so it cannot, we can't remove that from it. And you rightly said that the demand side to the inflation, we have to consider it. Or, we talk about insecurity, we talk about logistics, we talk about transportation, obviously because that fits into our food inflation. And knowing fully well that food inflation, accounts for 51% of the entire, headline inflation. So yes, I think people that say the supply constraints are there are not wrong. But also, as I said, the demand side of it should not be underplayed. It should also be, always talked about. And if it will remain elevated, I see it, for the full part of the year, on an average, we would see, our inflation rate still go up. However, in the later part of the year, let's say turning towards the second half of the year, we should see the base effects maybe
Sort of trickle down.
trickle down and moderate the rise that we'll be seeing. Obviously, because last year at the end of 2023 we saw inflation skyrocket. So that base effect should have when we are looking at the inflation year on year, you should see that limiting effect on our inflation. But for the total part of the year, we'll see inflation going up.
Interesting. I think
I agree with him too.
I
I
align
know
with.
people say that base effect thing, but I say I don't even focus on the second half of the year. Let's even get there.
I'm sure we.
Indeed,
Personally, thank you. But personally, on average, I still think it's going to be higher than what we had in 2023.
I was going to say you just situated the this economic trend that said, economists say but in the long run, we are all dead. So let's face the near term.
So just going to another perspective of the whole macroeconomic issue, do you see a misalignment between the monetary and the fiscal side of things? And do you see that really impact us negatively?
So this is going to be an unpopular opinion, but yes, I do see. So in my head, I see this new administration trying to coordinate their activities, but the reality is that there are conflicts in what they are trying to achieve, and it's inherent. It's not personality wise. You have a government that is looking to spend to take us to a brighter future. Budget for renewed hope. You have a government, so you have a monetary authority or a central bank that is trying to curb price.
Spike.
Thank you.
Inflation.
And with the new framework that they are looking to roll out, the inflation targeting, where you agree on a target and you mostly use interest rates to target. So basically, you're looking at demand side. You have a government that is going to go on a borrowing binge relative to previous years.
Yeah.
And I tell you, I mean, Safri is my friend, but then again, we're talking about I need the money. Is he going to allow the rates in the market to be higher? And that conflict is actually quite apparent right now because when the government starts borrowing in treasury bills, you see that the rates are slightly lower. Yes, the central bank governor actually allowed, well, let's not put it on the central bank governor. The central bank actually allowed the rates in the early period, inflation, November, I believe, it went high,
Yeah.
but then it now came back down. But then when you look at what's happening in the money market and what the other people are borrowing at, it's higher. So you are mopping or sterilizing monies from the system at a higher rate than what they're borrowing. So it's just there. That conflict is there.
You want to.
Yeah, I would just chip in. I mean, it's most of the time it's always very, very tricky for the monetary policy or the monetary authority, in this case now, obviously, because the fiscal authority has their plans. Most of the time, they vote out their budget, just as we've already seen. We've seen spending totaling about 29 trillion, and with revenue maybe around 11 trillion, and they have to fix. There's that deficit there, and they have to bridge it. So the monetary authority is put in a tight spot. So if I can use that word, because now they're chasing after price stability because inflation is rising, and as much as possible, they are also looking to raise interest rates because logically, when inflation is high, you'd expect the monetary authority to raise interest rates to curb inflation. However, when you raise that rate, the government is also looking to borrow. And with the situation of debt sustainability that we are talking about, that puts the monetary authority into, okay, so what do they do? Now, this is very tight spot. Now, this is the place where you demand the independence of the monetary authority, of the CBN governor. The question now arises: the new president, the new CBN governor have worked together in the past. How can we guarantee that there will be that independence? That remains the question. So there would be that will I say friction at the point. However, I would really want to see that alignment because it is very necessary. The CBN governor needs to do what needs to be done because if we are looking to attract foreign investors, you wouldn't expect them to see inflation rate at 29% and our NPR at 18.75. It needs to go up more than that.
More importantly, the rates of return.
Yes, because it's at a negative rate of return, yeah. And the more the inflation rate goes up, with MPC not having meeting since last year July, yeah, then the
studio meeting at the bankers conference.
I mean, that doesn't
That
put
helped to stabilize the market.
that didn't take MPR up. I mean, but however, as I said, we saw the effect on the T-bills rate. I mean, at the longer 364-day rates went as high as 20% in the secondary market. So to an extent, we saw that compensation, but there needs to be that alignment. We should see that in 2024, hopefully.
Interesting. Then also looking at, I have this feeling that this government is trying to tax or raise revenue through taxes. Do you see a conflicting? Or okay, let me put it down. Let me break it down a bit. We see household wallets being squeezed, inflation, people, there are lots of job unemployment. Now you are raising taxes. Different means to raise taxes. How do you see? Don't you see a sort of mismatch? Looking at, you're trying to grow the economy, people can't really spend because they are squeezed, yet you are still putting in another layer of taxes on them. How do you marry all this?
Well, according to him, the plans are not to raise taxes. So, I mean, fiscal policy is about taxing and spending. And if I recall from some of the message that he puts out there, it's more like government is trying to plug the loopholes.
Yeah.
So government is trying to plug any leakage and
tax more of the rich to compensate for the poor.
So I don't even want to go in the area of that taxing part. But the truth is, I think there are some quick wins that they are aiming for. And as he said, it's once we have that in place before we can now start to look at the other avenues or the other levers for increasing the revenue. So I will stick to what he has said and not look at it as taxes. But you are right. The wallets of the regular people is being squeezed, and that comes down to inflation. And that's why he said the monetary authority that knows what it ought to do ought to be looking at price stability. But the challenges are enormous. There's no
Hydra-headed.
There's no arguing that. It's just that you plug one place and you just need to have it coordinated.
Very true. Yeah. So as I said, I also do not see it from the angle of raising taxes. I mean, for now, with the information that is out, it is more of efficient tax collection system. And recently there was the buzz on the internet where he said that the primary people who sort of collect taxes, and I think he maybe mentioned area boys, and then conversations around why should we to talk about area boys, train them to collect money. But the message really is, plugging the loopholes as it says, there is much more money in the system via taxes that is not collected.
I think there's an informal tax system
Taxes,
where
yeah.
taxes are higher. I mean,
And
where
there are multiple.
Multiple,
especially at the
multiple.
macro level.
Yeah,
The bus
very.
stops, the
I
market
mean,
women, so many.
yeah.
It's not
So
trickling into government
into
pockets.
government
At
pockets.
national level, at the national level.
So it's a lot. So yes, yeah, and we should see. I'm hoping that he has done it for many years. He has the track record. You're hoping that experience, because sometimes the Nigerian system can frustrate you. I understand that. So I'm hoping that we could get the taxes optimally so that it can support the government revenue. We know fully well that the oil revenue, there is that level of volatility and instability. So we need much more of the tax revenue to also prop up.
Also match
I mean, for a couple of years, including last year, the government outperformed um, the budget when it comes to tax revenue. However, for oil revenue, we've not really seen that as a case. So non-oil revenue, we've seen overperformance of traction. So that should continue. Hopefully, should support government revenue this year.
Okay. Before we go to the markets, let's just be a bit of discuss around the rave of the money, which is this FX headache. We've seen FX rates spike. I think even on the official rates on the official market from as high as I think 850, 750, 850
Jump to
to
1,400,
1,430, and the whole buzz around market people complaining, things prices spiking, and I just don't know what do you think? What are your perspectives about this whole FX
The reality is
mismatch?
that the FX situation is what it is. It's
Sorry.
FX, as I see it, is an external price. So you have an issue where even your internal price, the inflation is going up, and you are trying to manage something that you have little or no control over. We know the major source of that FX, whatever exchange rates or whatever currency we're pegging into. We also know the revelations that are out there that it's just a smoke screen for the reserves that we have because we had borrowed against that and we're struggling to pay back. That what it is. I mean, you need the countries that have successfully defended their currencies, whether those that have a monetary policy where it's pegged to an exchange rate, is because they have that source. So we envy those countries and we say what it is. But when you don't have something to back it, it's just going to be a problem for you.
So you're saying we don't really have the
No,
reserve.
we don't have the reserves, and the CBN, this new CBN, has actually been a bit forthcoming with the information, but I guess in little doses because the moment we realize truly that there is nothing there, probably everything will go pear shaped. But then again, maybe it's one of those things where we need to have some real talks with ourselves as a country. Yeah, and adjust to what it is. And like I said, one more time, it is an FX for me is an external price. Yeah, internal, domestic. I am more focused about what happens within the borders.
So where do you see FX peg at for the year, like an outlook for? Some have said 2,500.
A
Some are
wise
saying
man once
5,000.
told me that predicting FX is a mug's game.
So you want to
Shout out
just
to
stay?
Odoyin Salami.
You want to stay sit on the
I
fence?
will never. Wildest dream. I don't know what that is.
Mr. Sadiq, do
Yeah.
you have any contrary?
No, contrary opinion. I mean, it's something. The conversation goes on and on about the supply side, and that is rightly. You mentioned it about it being an external price, and we don't have the power to print dollars. We do not.
We're also an import dependent
Dependent. So
We can say that, but he did say something. So we are printing the naira thinking that it's going to help us buy the dollar,
dollar.
but you're only just increasing the supply of one over.
against the other.
Yeah,
Yeah.
which we don't have.
We don't have it. So the ways to get the dollar is through exports, really. I know we've talked about exporting our crude oil, we do that, but in recent times again, that has dwindled owing to the fact that there is oil theft, there is vandalism,
And also
oil
all
production
the
volume.
forward forward contract obligations.
I was
Obligations,
waiting
yeah.
for him to finish talking to say that
Put
we've
ourselves
already,
into
we've already
We've
pledged those
we've
funds.
mortgaged the
Yes.
future.
we've collected
And
now.
then
So-
you can see how it's going to cause some people to borrow because you have the subnationals that are dependent or had gotten used to receiving more.
Handouts from the federal.
Thank you, because of the exchange rate that is being used to change or convert their own proceeds. But now you're telling them that you know what, you're probably not going to be getting it because we have, like you said, mortgage.
Mortgage. So it's hard. I know even recently I figured that in for a couple of years now, about maybe 10 years, our foreign remittances, diaspora remittances has even been higher than foreign direct investment.
But
You
the
know
problem
the
with foreign remittances to me, I don't think it's adequately captured, or it's sort of it's just everywhere. Sort of, it's not, doesn't trickle. Government can't even monitor. We can't even say for sure this is the amount of. I don't know if.
Well, I know the records are kept. I don't know if fully everything is captured, but even the number that is captured, doesn't it worry that diaspora remittances sort of is higher than foreign direct investment? That begs question of why are people not bringing in money into the country for long term? Because foreign direct investment is meant to stay for long term. It's not your hot money.
Hot money. It's not.
Yeah, so it's meant to be there. So if the diaspora remittances is higher, then it's a worry. However, some people say the jackpot syndrome, maybe it's positive for us in that way. It compensates for it, because when people go out, they bring in money. But the truth is, FX liquidity is there, and without that supply side, there is going to be pressure. Again, I think a lot of people do not necessarily talk about the lack of trust of citizens in government, maybe because you can't quantify it. That is more
I think that's
qualitative,
very key.
because
very key.
the masses, when they lose trust in the government, they lose trust in the currency. What they do now is they see the dollar as another
Safe haven.
another safe haven. So they take their naira and try to convert it into dollar, and that puts more pressure.
Why is that? And why does that happen? Because we have neglected the internal aspects, the internal price. If I were sure that my naira today would buy me the same thing that it could, why would I be rushing to change my currency? Once upon a time, Nigerians used to travel outside the country without changing their money, the card that they had. Everything was stable. Yes, you could say that we went through a very good period that no one paid attention to, or we had the reserves to back it. But I'm just saying one more time again, things were stable internally. So not everybody travels, and not everybody buys imported things. Come back to it again. That price, that basket of goods and services, food, staple. That the people, I mean, you and I, eat.
Yeah.
Yeah, correct. So I think there's been this growing, will I call it, information rumor on the grapevine that there could be a potential for the government to convert foreign currencies in domiciliary accounts.
CBN already debunked that this morning.
It's
It's non-existent.
it's non-existent.
I mean,
Because I'm just looking at the ratchet effect that we
yeah,
have.
I don't see it happening really. I mean, legally, I don't even think it's possible. But don't let it even go to the legal part, because some people can come up with controversies about how people maybe the new government respect the rule of law. So I'm not even going to that. But the CBN already debunked it. It's a story that comes up once every year. Maybe it's an
But I
annual
think it
right.
also goes back to the question of trust.
Exactly.
Because it's when this whole madness keep happening, the citizens tend to start preempting moves of the government and trying to hedge one way or the other.
So let's try to break this down. If you look at the CBN data, and it's a bit restricted in their statistical bulletin, you will actually get an indication of the holders of this currency. Yes, that's been translated into naira, but I mean, based on percentages, you can say who has or who isn't. There's the non-financial aspect. There's the individuals like you and I, and then there are also foreign companies or foreign individuals that have their money in here. So when you say you are looking to, how do I put it now?
Convert.
Thank you. I'm I got lost for. I like a better word to use. Which people are you actually targeting?
The institutional?
Well, thank you,
Is it the
because it's not
institutional
just they're
holders?
not all Nigerians, and I'm saying that we also know that there are legitimate businesses or there are legitimate needs for holding these
For
monies.
holding this
There are
currency.
people that transact with foreigners, and that's why they have those. I mean, they have the currencies to back up their transaction. The banks themselves that have lent out to people for import financing also need those things. So you start to ask yourself that in trying to solve one problem, are we not
Creating
creating
more
others?
problems.
And you put that into context with the new circulars that are out there.
Being a barrage.
Yeah, and you ask yourself, okay, all right, all right.
I think with that, we can quickly jump into the market. Yeah, with the whole negatives that happened in 2023, the Naira redesign, the election, the crunch, I think Naira crunch and
Yeah,
the likes. The equity market still closed positive. I think
mhm.
45.9%,
Yeah,
if I'm correct.
5.9%. Yeah.
And we've seen the January madness, January
Mhm.
rush. I think in January alone, the market did about 35%, although
Thereabouts.
we are beginning to see a bit of pullback. So, do you still think we still have traction of value in putting our monies
In
in
the
the
equities
equities market?
market.
So I think on the back of that question, we can jump into the market. So for equities, we've seen the market do, or despite the negatives that happened last year, the whole Naira crunch, the whole FX issues, we saw the market do 45.9%, if I'm not mistaken.
Yeah, very
Then
correct.
we've seen the January giveaway, like people will say, the market has done 35%, though we are beginning to see a bit of pullback. What do you think really caused all this? And
Mm,
do you still see value in
value
you
in it.
putting money in the equities market?
So let's just unpack it a little bit because we have to talk about the 2023, the negatives, what played out really. So in the equities market, because this is an outlook, I wouldn't just want to go deep into the 2023, but we saw positives in 2023, to be fair, despite the negatives that you talked about.
One was
And
the FX.
yes,
It was mad for the whole.
so
It was positive for the banks.
exactly. So
And translated to
there were
FX gains.
several drivers. We had at the beginning of the year, it wasn't also smooth because we had that level of political tension. You know, we are going to election, and it was
Uncertainty.
there was that uncertainty. Then it came conversation around if the election was legitimate, if we had a legitimate president, and that continued for a while. Then the president was inaugurated. That's that sort of change tides of things, especially his announcement of fuel subsidy is gone. We saw
Impacted the oil and
oil and
gas.
gas. The following day, the next trading day, we saw rally across oil and gas tickers and banking tickers.
Yep.
And from there, we started seeing there comes temporary suspension of the CBN governor, there comes unification of FX, then banks published their financials, seeing FX gains for some banks that were net long, you know, drivers for consumer goods. Fundamentals for them wasn't so good because they were faced with inflation, they were faced with FX, and you see a bulk of Nestle, you see the Cadbury,
Manufacturers, basically.
the manufacturing companies recording losses and huge bulk of FX revaluation loss. However, in that sector, we saw the proposed merger of Dank Sugar and NASCON with Dangote Rice.
I think that's still in the
Again,
pipeline.
it's still in the pipeline. Again, that pushed rally in the consumer goods index. Insurance companies also enjoyed from FX evaluation gains because they also play, to that space. For banks, I already mentioned banks. So
And we saw
across,
the proposed bank
yes, a
recapitalization
capitalization
that's also
exercise at the end of the year. So it was it
blew the
was it
market.
was just it was just really good. So the negatives were there because some people would say that why are we not seeing the equities market reflect what is happening in the macroeconomic space? However, we also need to understand certain dynamics and how it really played out. And for the first time since 2017, all sectoral indices closed up. They were all positive. So that was really really something that we should pick on. And even the dynamics of institutional investors to retail investors sort of changed because we saw retail investors used to account for about 13% as at April 2022, and at the end of, I think, around November or at the end of the year, we now it accounts for about 36% on an average. again, that puts to perspective me and you seeing the
Value
equities market and
in the
then
market.
gradually coming
Trading
into it
it.
to try to trade. So if there is still value, there is. I mean, we still see it.
So do we still
The
see it has done 35%?
35%.
So it's sort of retreating.
Okay, so when you
Can you do 100% this year? Or 120%?
so that is your own definition of value.
Their value
your,
is returns.
your
I
own
don't want to
definition.
put my
Okay,
money where I won't
definitely, I agree with
see
you.
returns.
So what I see happening actually is we would see market correction. We've started seeing it. There is a smoke screen, which was the rally that we saw with Danksem, which sort of blurred
More
the way
industrials.
it is the movement, because there was that level, there was profit taking for like 2 weeks now. We've seen that across the banking tickers, insurance tickers, and all of that. But because Danksem has been doing 10%, 10%, 10%, we've seen markets closing up. So we would see that market correction. Definitely, there are. I also believe that ahead of companies releasing their financials, it
And
will
also,
sort of
sorry to cut you short, we saw a parade of policy, a circular releases by the
yes, by
CBN,
CBN.
FX, removing of the FX barrier,
Yeah.
talking about the cash reserve ratio
Mhm.
framework and the likes. Do you see that also impacts going forward the ability of the banks to make profits, or the impacting profitability of the banks negative?
So profitability, no. So the thing you need to look at is, have the banks even been making profits even before 2023? Banks have been, maybe not
But with
bloated.
this zero net open
No,
position,
maybe
with
not.
respect to FX, do you still think they will have
So the thing is
much
that
trading power to be profitable?
the thing is that what that 0% long does is, because they are not, will I say, taking a position of further devaluation of the naira would benefit them. However, there are still some other, dynamics, and we even still have several revenue streams. Banks now they have the liberty to take on the universal banking license, which allows them to play in non-banking financial subsidiaries. We've seen likes of Access, GT acquire. Yes, you see them acquire pension fund administrator and all of that. So there are still ways. The major Exactly. The major box of it, which is the interest income, is there. What that net long, what it affects is FX evaluation gains. So
that is quite significant.
It's
significant.
significant.
Once it moves and you have that,
It's
you are
significant.
long on dollars, you are in the money.
But it is the reason why we are looking at it is because of the devaluation we are seeing now. What if the naira appreciates? Or what do you say?
Do you have a contrary?
No, I don't. And speaking on what happened in the market last year, you can more or less say that it was a broad-based market rally.
Mhm.
So you have the banking index that outperformed the others by almost 200%. Someone will tell you you're using naira to purchase a partial dollar asset because of the net long position.
Yeah, true.
What you are
True.
seeing,
I didn't think of that, but true.
that's that nugget of wisdom is not mine. I know who I'm
True.
quoting. So if he sees this, he'll probably say, "Uh-huh." Then what you are seeing this period, like you said, is another rally, but not only in a few areas. Now, what people haven't paid attention to is that there are 5 companies that actually account for almost half of the total market capitalization. And this month, this January that just passed, one of them literally blew everything out of the water. So we're moving. Thank you. 12. No, almost 13 trillion.
Yeah,
actually.
almost 13 actually.
Almost 13 trillion.
And now accounts for 24% of the market.
Yes, so you're moving from about 5 or 6 trillion. You're vying with MTN for number 2. Then you now blow past number 1 that used to be at maybe 7 or 8 to, like, you now have a gap of over 5 trillion. So you have one person now or a few people dragging the entire market. So anyone that is rushing in thinking we are going to cash out, I'm sorry, it's not like that. It's not a broad-based rally.
Yeah.
It is not. It's just it's an unfair thing. Now, whether that will happen going forward, because you ask yourself, what are the fundamentals driving this? We're talking about a consumer goods business, or if we want to look at it in a simple way, we're talking about makers and takers. We have people that make stuff, and we have people that take stuff. The service industry, and I don't want to call names, dollar people, and so on. Is it reflective of it? Because you think that if a bank supposedly lends money to the different parts of the economy, whatever happens to them is a reflection of what is happening out there, but it is
Yeah.
not. So it's just it. Chasing this rally might be detrimental to a lot of people. Within, I mean, there are some people that have actually made quite a killing in the micros. I don't want to call them, and that's just being disrespectful to them, but not the large cap stocks.
Yes.
But it's not a broad-based rally.
Yeah.
Sure. So for
And
you don't, are you still saying at this prospect of making money in this market? If I want to come into the market now, are you giving me a negative undertone with
No,
respect to
well,
the
so
returns?
let's also, there's also this thing that we get taught in school where, and that's why we all lose money, a lot of us. What is your, what is your return objective? What constraints do you have? If you want high returns, then you might as well expect high risk.
yeah.
If you need the money for a short period, maybe the equity market or a particular asset class is not what you really want. So just because Safiri made a lot of money, better pass my neighbor, you get into that problem of, okay, I think I need to be there, but he knows, or whatever returns he's telling you about, I'm sure it wasn't that he entered in January 1st,
And then
2024. Yeah, probably a few years back. Sometimes you just need to let the bus
Then
go and hope that you catch the next bus.
get expert opinion.
Exactly. And you mentioned something about not being broad based, and that is the reason why the financials that is going to be released. I do say it that it would separate
Correcting.
the shaft from the
Because
beans, the
those
boys
with
from the
higher
men.
valuations that can't
Exactly.
defend it with fundamental
So
performance.
when you are trading at this price and what you are bringing on the table as your EPS
EPS or
is,
PE ratio.
or your dividend, the DPS you are paying, your dividend per share is looking funny, then people start to dump. So it comes to say that there is value. However, don't follow the boss. It's always don't time the market. And you rightly said sometimes you just have to watch the boss leave you, let it go, because it will always come back.
So it's a
it will,
circle,
yes, it's a circle.
But
So
looking at it, do we still have major drivers that speaks to the positive performance of the market? Are we still going to see the banking capitalization happen? Dangote, Sugar, NASCON, are we still going to see that? We hear there's going to be a share buyback by Airtel Africa, I think about $100 million of shares.
Yeah.
Will that still happen? I'm just looking at the positives that we can lynch on.
Yeah, so there are positives, really. There are positives. And despite what we are talking about market correction, I expect the market to close up. So that should be clear. There are positives. We have
Then the back of the
recapitalization
measures because we're
from
hearing
banks.
a lot on the grapevine. I don't want to mention names, but there are some tier 2 banks that the rumors
Are
have been,
looking
and
to-
we've seen the prices reflect that. So I just want to have a bit of expert opinion.
Yeah, so we're going to see business consolidation for banks, especially for me. I expect it more with regional banks, the tier 2, as you said, and some other regional that are not even listed on the Nigerian exchange yet. So we could also see capital raise, maybe via rights issue. We've seen a couple of that. We've seen with FBNH proposed now. We've seen with Fidelity. We've seen with FCMB. We've seen with Wema. More to come. For tier 1, they are very comfortable.
But comfortable with respect to
They are I mean,
we are
they sit
hearing
as
the new benchmark could be as high as 200 billion naira.
even if it's 500 billion, they have equities of 1 trillion, over a trillion naira.
Over a trillion.
For-
Mr. Bilala,
for-
do you
So
sort of agree with?
I won't want to preempt what the CBN is thinking of
CBN?
doing, but then in fairness, when
Because the government has said for the economy that I think is a $1
$1
trillion
trillion economy.
they want the banks to be well suited to be able to cater for the
first
needs.
and foremost, I have an issue with the monetary policy that is trying to support the fiscal policy and achieve a target. That is not their job.
Correct.
Very true.
Talking about price stability. Second, on this same issue again, we saw what a recapitalization and a consolidation exercise led to in the past. when you endow me with more wealth or with more
lead to the rise of
with more assets than
monopolies.
I have the capacity to.
True.
There's a tendency to be profligate and do rubbish, and that's how we led ourselves into the we got ourselves into the last financial crisis. We contributed our own part before the global thing hit us. And so back to this again, this consolidation exercise. We are forgetting that when we saw those bumper profits and all those revaluation gains, they were mainly the tier one banks.
Mhm.
Nobody actually came out shouting about, this tier two bank was also present. Yeah. And when you start to reprice your loans and the circular of September last year about everybody should change, all dollar denominated loans should be converted to naira, we tend to forget that there is some element of maybe non-performance that might impact the capital of the bank.
Very true.
And as regulated entities, you have a capital adequacy that you're supposed to maintain. So those are things, and that comes back to why I believe the CBN is a bit reticent with information, because in my head, when the CBN governor gave that interview or that went for that bankers
conference,
when he said that thing about recapitalization, I started thinking, what has this man seen that made him think of this? And why are we now talking about all the other, when you start thinking about all the other secular? So at the back in my head, behind the scenes, he has seen, okay, there's a capital shortage here, we have this, we need to do this, and so on and so forth. And that's why all that talk is about, okay, how can we, and some people have taken the initiative, whether through rights issue or whatever, maybe some might consolidate. We hope that there is sufficient time for those things. But if it is that we are building institutions for $1 trillion economy, so we have to be quite careful about
circumspect with the process.
Yeah.
So coming to the fixed income side of things, we saw interest rates increase 3 times last year. If I'm correct, I think April, I think July, and sometimes towards the end of September.
March, May,
from 18%, it went up to 18.5 to 18.75. And a lot of experts are anticipating more increases this year. And in respect to, I think they've appointed, put a meeting for the MPC meeting sometimes in February. So in 2024. So we've seen a lot of market, especially in secondary market, we see a lot of traders giving up bonds to hold cash in anticipation of the increase in interest rates. So what do you see? How do you see how that play out in the fixed income market?
Okay, so one is we also need to understand the dynamics of Nigerian fixed income markets, being the fact that it's something that more of liquidity sort of call the shots, and again, majorly dominated by the government instruments. We have the FGM bond, we have TBUs, majorly. And when we are in a situation where the government is looking to manage borrowing costs, as well as we investors, we are also trying to maximize returns. They are also looking to attract investors into the space. So there could be a lot of volatility, and you have to be careful. So there are circulars being released away from even the NPR hike. There has been some level of liquidity management, especially from the CBN. I know the CBN governor comes out, and most of the time when he comes out, he reiterates that every 8 a.m. in the morning at the CBN office, they have a meeting talking about liquidity management and how to sort of manage that. A recent, I think that was yesterday, circular about, maybe reduction of no more excessive CRR debits. That also speaks to, so the banks now see incentive to actually, instead of trying to go and buy these instruments so that they avoid holding cash, we then I'll be giving it out as loans. Again, that speaks to the level of liquidity that would now be coming into the fixed income space. Putting all these indicators into perspective, or consolidating them, I would still expect yields to remain elevated, both on T-bills and on bond. We've seen that. This last week that went, we saw T-bills yield, average T-bills yield went from about 4% to about 8%. That's that magnitude, and we are going to score, across the year we'd see that play out. I would expect that the average T-bills and bond yield for this year should be more
Much
than we
elevated
saw
than
what we
last year.
saw last year, because there are several reasons pointing to that. We need those rates up to get investors to bring in money.
Mr. Bilala, do you quite agree with him? Or?
Yeah, I mean, it depends what you're trying to achieve. And he just told you now that you have the largest issue of instruments looking for low cost pricing. I mean, in terms of the interest rates out there, like I said, in my head, what I've seen so far is that it seems to be two-sided market where fiscal supposedly gets a pass and private sector, well, more or less would price their instruments off of that, also having to suffer a bit. And that interest rate play, for me, in the private sector has to do with the interbank rates and the other things that happen. If the CBN, as it has planned, constitutes a new committee and a new framework that truly targets interest rates, you have to ask yourself, really, I mean, those rates, like I said, they have to go up. If you're raising those rates now so that they transmit through the banking system, the transmission mechanism that we all talk about,
Yeah.
Something has to give. Something definitely has to give. And some of us will say, please, for the love of God, do not raise rates for the purpose of attracting foreign
investors.
Thank you.
Let's collect things
Thank
internally.
you. Let's correct. You and I have pension.
Yeah.
A large chunk of our pension money is in fixed income.
Mhm.
I mean, that fixed income is government instrument. So I still continue to advocate deal with the internal family members.
And
not
also
the
look at the cost
investors.
element on the CBN's balance sheet. How do you think?
Don't get me there. I'm an advocate.
How
However
do you
much people
think-
think I criticize the CBN, I am an advocate for the CBN because they ensure or they have the power to determine that the 1 naira in my pocket still is the 1 naira that I go to spend tomorrow or the value that I can purchase with that. So I have tremendous respect.
So on the Eurobond side of things, you still see the government coming to the market to borrow, the international capital market to borrow more to shore the reserve with Eurobond raisings this year.
So it comes back to disclosures again.
So I'm looking at pricing. If we go now with the level of liquidity with the FX issue we are facing, we will be priced high. And do you still think the government will be able to buffer?
He talked about debt sustainability. So debt sustainability internally and externally.
Wow.
I believe the foreign or the commercial debt component of our standing is about 30-something%.
Yeah.
And it's really getting higher. That's why the government is trying to stay clear of that market and chasing the multilateral agencies to get. But one more time again, what are you exactly borrowing for? Is it to shore up or the exchange rates? How much do you think how much do you really think you need? Those questions or the answers to that will start to let you know the enormity of the situation or the task at hand. We just got how many billions a few months ago, a few weeks ago. Has that done anything for the market?
So he's speaking from the macroeconomic point and maybe looking at how the government is looking to handle it, speaking purely to markets and investors that are looking to plug into money. I wouldn't rule it out, to be fair.
But even it's going to be at a higher pricing.
So what I see them doing is, we are expecting at the later part of the year, we should start seeing rate cuts from advanced economy. I wouldn't see them going now. I don't see them going January, February, March. I don't even see them going first half of the year.
Q4.
If at all it is going to be considered, I see them going when the Fed has maybe cut rates like 2-3 times. At that point, Fed fund rates comes lower. Even if there's a risk premium, there is always risk premium on sub-Saharan Africa instruments that is going into the international markets, not with the attention that Ghana, Zambia, Ethiopia had put on a couple of us already because of their default. So there is going to be that premium. However, it is something that I believe could be considered. I don't rule it out. He mentioned that the external reserve is it there? Is it there at all? So to an extent, if they would be looking for, to get these effects to come into those are some of the, like, very quick ways to consider. So it's not something to rule out. However, I don't see it in the first half of the year, maybe the later part of the year, when the Fed has cut rates maybe 1, 2, or 3 times, then we can go there to borrow. And I mean, our government used to sort of first say, let's face the issue at hand before thinking about it. So debt sustainability is still going to be a very it's still going to be a very, very big issue, especially.
I also think across the sovereign curve, we have some maturities coming on board for Nigeria as a sovereign entity. And there's been this fear also of are we going to
Financing?
default?
Mm.
Do we need to refinance? And that's why I brought the issue of are we coming to the capital markets?
So
Capital
for
market to raise.
for
Because he
international
said, is
markets,
there really reserves? Or do
yeah,
we have, and that's why I'm also bringing this question, because looking at sub-Saharan Africa, there's this fear. Okay,
of
Ghana,
default, yeah.
Zambia, Ethiopia, is Nigeria next online?
Mm.
And I just want your perspective. Oh,
So what do you have an idea of the yield on euro bonds? I haven't looked at that in a while.
We should
for
have around
for
9%,
sovereign, yeah, around
average
8.5.
9%.
An African country, next door, a francophone country, raised money not so long ago at a very good rate. But of course,
Is that Ivory Coast, Cote d'Ivoire?
yes. But if then again, you also know that a portion of those francophone countries' foreign reserves is
Tied to
warehoused
France.
Yeah,
in their hands, so there is that kind of cover. But they got a good rate. Euro convertible issues, whatever.
Not of
Yeah.
country-specific risk.
I think
Yeah,
about
that's-
6%.
Yeah,
So
thank
speaking
you.
to
Yeah, but I'm
Nigeria.
just saying that. So if you're looking out for something to price over, that is an aspect. But then again, like I said, these are the sort of enhancements those ones have. That's what able to get
Of
that.
ours.
If you need to pay back and you don't have the money, I would think that you will have to go back to the market and possibly
Go and speak to IMF like Ghana
I don't
did.
think you can for that particular just to find a way to compensate them.
Yeah.
And compensating them will require you
higher.
thank you, and you hope to God,
your
like you
balance
said,
sheets.
at that point in time, maybe the horizon is a bit conducive
For you to
to
raise
get.
funds. And just speaking to maturity, I know we had one in 2023, the July,
Which we honored.
which we honored, the 500 million. So the next one is still next year or next 2 years, I
Next year,
think.
2025.
2025.
These
For
corporate majorities for this year.
yeah, for domestic, we have one in March 2024. I mean, the reason why it's typically tax risk-free in the first place is because we can print and then repay. Hopefully, it doesn't get to
But on
that
this
to
side
that
of
extent.
Okay. You're speaking to the
To domestic now, to our FGM bond, we have maturity on 2024.
There are no fears.
So exactly. So if well,
I think
we said that for Ghana.
The wins and
No,
means
no, no.
routes on a worst case
As a
scenario.
true citizen, I feel disrespected. I would think that Nigeria would default on how much?
Looking at that, I feel the government, to a large extent, might have that sort of bloat on its balance sheet, and that's why I'm saying, with the whole payment schedule coming on board, and the fear that the foreign investors or foreign guys have that Ghana has defaulted, Zambia, Ethiopia is Nigeria next online. And do we really want to put ourselves in that space, or we just quickly refinance or raise a new Eurobond in the international capital market space and just have that foreign FX liquidity to be able to meet up with those coming maturities for our Eurobonds? I think 2025, which is the next maturity. I don't know, Mr. Bilala, do you want to?
I'll let him handle that.
Okay. Yeah. So I mean, the question is when. So if we get the funds, if we say we raise the fund, keep it, then use it to refinance. Then I mean, why are we? I mean, we have pressing issues. So the first would be, even if there is an outlook for the raising of Eurobond, fine, we would have would maybe when the Fed has cut rate about 2 to 3 times, we could see that. I don't see it happening first half of the year, to be fair. Maybe second half of the year, obviously because of the elevated interest rate. Generally in
And also, are you
sub-Saharan,
factoring the global tension still ongoing,
yeah,
Israel,
well,
Palestine,
yes,
Ukraine, Russia still
Russia. So generally in the global space, or for sub-Saharan African countries, we've seen the high pricing, the premium that is there, and that was the reason why some of us, the countries doing good here since 2022. We just have recent one from Cote d'Ivoire, and I think Benin Republic is also looking to raise their first ever dollar bond. So we are seeing that re-entry back into the international capital market. For Nigeria, there are concerns. Obviously, it's evident because one is the devaluation of naira makes
more expensive.
Exactly, makes it more expensive. Yeah,
Naira.
and when you even convert that and you look at our debt sustainability metrics,
That's GDP.
it's very high. The securitization of ways and means have also been added. So our debt profile, the stock is over 80 trillion naira.
It's the wrong time to be the CBN.
It's too much so, but I really do not see fears at the moment. Certainly not for the domestic or FGN bond. For the for Eurobond is also at this point very low. Because when you do a foreign reserve, I'm taking the gross now as reported by the CBN. When you use our foreign reserve, you do that against the cover of our finance obligation. You would see that it's really something that there is to that extent. And the fact that we don't even have any maturity this year,
giving them a bit of lax.
Yeah, give them. Hopefully, we get things
sorted out
a little bit more comfortable, and our FX is short up before we go again.
Do you quite agree with him?
Swaps,
okay, the mortgage,
contract applications,
whatnot, maturing automobiles.
It's really a bloat on the balance sheet of the
It is.
It's a delicate balancing act for whoever it is that is leading the institution.
That's on that hot seat.
Let's not make light of the situation.
So just to get things a bit lighter, sorry to cut you short, what other instruments or what other asset classes do you think investors can take advantage of that will give above inflation returns in terms of real returns now? What do you think? Is it commodities, real estate, or what other asset classes? Or can we go the cryptocurrency, the digital asset markets?
So, and this comes back to one of my rants online. Everyone is looking to safeguard their assets or the purchasing value of their currency or whatever it is. When the past CBN governor was ranting about people buying crypto assets, he failed to realize the part that he played in it. Like I said one more time again earlier in this discussion, if my naira, the purchase power of my naira is stable, why would I be bothered about other things? Why will I sit down and let someone come and sell me a Ponzi scheme that is going to get a higher return? It's because I need to make this naira work for me more than what it is. But back to your question, let's not stray too far from this thing. Theoretically, they tell you that there are certain asset classes that move with interest rates, so that are inflation hedges. One of them will be the interest rate sensitive product like the bank.
Okay.
You and I will sit down here and probably get a text tomorrow. Our loans have been repriced. What are you going to do? Nothing. So you take it as it comes. Then you look at, so those guys, at least they provide some form of hedge. They talked about the commodity companies too.
Yeah.
I don't want to go towards the palm oil people. There is that part. So,
Yeah.
or you're talking about the people that also maybe deal in the refined crude and some other things. And truly, I mean, we can't start to go to the real estate part, but real estate for whom now? Because there are properties that not everyone is targeting a particular niche. That's that part I think is oversaturated. But he's more of a market person, so he will tell you specific ones. I just try to narrow it down to the sector.
Okay, yeah.
So what other asset classes are apart for equities, fixed
Equities,
income?
you can't say apart from equities because equities obviously give
Above
above
inflation
inflation,
return,
as we've seen. Again, as you mentioned,
but with
your
higher risk.
return objective is necessary. So with higher risk, it comes with that. And I think if you would actually be looking for above inflation in Nigeria, you also have to be looking that your risk is high, to be fair,
Yeah, definitely.
because you wouldn't sit with fixed income
The
instruments.
higher the return, the higher the
Yeah,
risk
the
you should be
risks.
prepared to take.
So fixed income instrument for a very long time now has been giving negative rate of return. So I wouldn't say that. Investment in Eurobond is there. The expectation for Nigerian Eurobond and some other sub-Saharan African countries, we want to mention name. We have Senegal, we have Cote d'Ivoire.
What Ghana achieved us.
No, but I mean, one would be edging against FX in that sense. And then the expectation that the countries have good fundamentals. So you could see price appreciation on, some of them. So yes, we would see, that could. And as you also said, we have some companies on Nigerian exchange, especially palm oil, that do with exports. So what that means is that they have FX edged revenue, and it sort of also keep them at bay. Um, the agricultural sector, a defensive sector in the sense that, I mean, 9 out of 11 years, the last 11 years, 9 out of it, the agricultural sector has returned positive, returns. Again, because it's defensive, sort of, because when you get to see the economy maybe doing good or not doing so
That's a
good,
stable
yeah,
demand profile.
it has that. So we could see it, and real estate is there. We also have gold.
A lot of commodities, yeah,
Yeah,
gold,
that's it. I mean,
metals.
not to bash or put more pressure on our naira, but there are also FX assets to
Yeah.
talk about. We're talking about purchasing power, so not advocating for
Mm-hmm.
any, but yeah, trying to stay on the safe side.
Yeah.
Commodities, and the reasons why we talk about the companies is because yes, there is an additional layer of cost for a commodity company because you have to think about the employee cost as opposed to investing directly. Just that very few people actually have that access to buying those things. I mean, not everyone will come out and tell you, "Oh, I'm going to FX commodities to buy XYZ product or buying gold or this." I mean, so we can't talk about it theoretically, but what is actually available to most people.
So just to sum everything up, it's going to look like it's going to be a positive year for the markets this year.
I'm
Both
expecting it
fixed
to.
income, both
I'm
equities
expecting
and
it to be.
commodities.
We saw it last year. The you know the issues in the macroeconomic, the challenges, they are still persistent. We just have to find ways around it. And yeah, the market is expected to be positive. We've seen it in January. There could be market correction at and that's the reason why we would advise investors to stay close to the financial experts or investment analysts that consistently tell
Monitor
you,
the market
yeah,
and
monitor the
give.
market and sort of give
Okay,
direction, so you
okay.
don't just enter at a very high
Do
price
not
and you
shoot
see.
blank.
So yeah, that's it.
So,
So I'm expecting the market to be positive.
so thank you very much, Mr. Bilala. Thank you very much, Mr. Safi.
Yeah.
It's been a pleasure having you both on our podcast for the first quarter and looking at the outlook for the year. And our esteemed investors and viewers, thank you very much for staying tuned with us. And like they all said, the market, the volatility that comes with it, and the other topsy-turvy issues, you need to speak to financial experts, and that is why Stl Asset Management, we are here for you. We have diverse products, diverse investment options to offer that will give real positive returns to you. Thank you very much, and stay blessed.
Thank you,
Thank you.
Sharon.
Thank you very much, Robin.